Hey everyone, welcome back to Talk Tickers, where we break down earnings calls so you don't have to. Today we're diving deep into DoubleVerify's Q4 2024 report. And let me tell you, this one's a real head scratcher.
Yeah, there were definitely some curveballs in this release.
Big time, you'll recall that DV stock took a major hit after the earnings release. We're talking a 36% drop. So let's unpack what happened and what it means for the company moving forward.
Sure. So let's start with the high-level overview for the full year. DoubleVerify reported 15% revenue growth, reaching a total of $657 million.
Okay, on the surface, that sounds pretty decent, especially considering the economic climate.
Right, not bad at all. Their adjusted EBITDA margin came in at a healthy 33%, and they generated $160 million in net cash from operating activities, so they're turning profits into actual cash.
So financially, they seem to be in a good spot. What exactly spooked the market then?
Well, Q4 came in below expectations, and that seems to have triggered the sell-off. It looks like a slowdown started in October, with brand advertising taking a hit due to that surge in political ad spending.
The post-election squeeze makes sense. Was there anything else going on?
Well, there's also the issue of reduced ad spending from some of DoubleVerify's key customers.
Okay, now this is where it gets interesting. Give us the details.
So throughout 2024, 6 large customers scaled back their ad spend with DoubleVerify, and then there's one major customer that significantly cut their DV budget in Q4.
Ouch, that's gotta hurt. What happened there?
This particular customer was hit hard by rising commodity costs and had to make some drastic cuts across the board. Unfortunately for DoubleVerify, their budget was one of the casualties.
Wow, talk about bad timing. How much revenue did they lose from this one customer?
This customer alone accounted for over $20 million in revenue in 2024.
Yikes. No wonder the market reacted so strongly. That's not just a dip, it's a significant chunk of their revenue.
Absolutely. But to be fair to DoubleVerify, they've excluded this customer from their 2025 guidance, which is a smart move. It shows they're being transparent about the situation and managing expectations.
Agreed. Better to be upfront about it. So we've got a revenue slowdown and some customer losses. But is this a DoubleVerify specific problem, or are there broader industry trends at play here?
That's the key question. And from what we're seeing, there are some significant shifts happening in the digital advertising landscape that are impacting DoubleVerify. It's not just about them, it's about the evolving dynamics of the industry.
Now we're getting into the strategic stuff. Break it down for us. What are these big industry shifts?
One of the biggest trends is the flow of ad dollars from the open web to walled gardens, like social media platforms.
Those giants like Facebook and TikTok. I could definitely see how that would be a problem. Their ecosystems are pretty closed off.
Exactly. And until recently, DoubleVerify's activation solutions weren't really available within those walled gardens. They're playing catch up now, but it's a race against time to gain a foothold in these rapidly growing spaces.
So they're losing ground in one area while trying to gain it in another. What else is happening in the industry?
Another trend is the rise of private marketplaces and programmatic direct deals. This shift limits DoubleVerify's ability to apply their solutions to every single ad transaction, which impacts their reach and potential revenue.
That makes sense. It's like they're getting squeezed from multiple directions.
Exactly. These market shifts are creating headwinds for DoubleVerify, but it's important to remember that these are industry-wide trends. It's not that they're doing something inherently wrong, it's about adapting to a changing game.
Right. It's more about staying agile and evolving with the times.
Exactly. And to DoubleVerify's credit, they're not just sitting back and letting these trends wash over them. They're taking a proactive approach to address these challenges.
So they're fighting back. Tell me about their counter strategy.
They're laser focused on expanding into those social media walled gardens, think Meta and TikTok. They've recently launched new pre-bid solutions specifically designed to capture a piece of that growing social media ad spend pie.
That seems like a logical move. Go where the money is flowing, right?
Absolutely. And they're not just focusing on the buy side, they're also pushing hard into sell side solutions for SSPs.
Now, I'll admit, SSPs are a bit of a blind spot for me. Could you break that down a bit?
Of course, think of SSPs as digital real estate agents for publishers, helping them sell ad space effectively by offering solutions to these SSPs. DoubleVerify can get a bigger piece of the action in those private marketplaces and programmatic direct deals we talked about earlier.
That's a great analogy. So it's a two-pronged attack, then conquer the walled gardens and get more involved in private deals.
Precisely. They're covering their bases, but they're not stopping. They've also been making strategic acquisitions to bolster their capabilities.
Ooh. Acquisitions always shake things up. Which companies are we talking about here?
First, they acquired a company called DV Sybase. They specialize in performance measurement and optimization using AI. Then there's the soon-to-be-acquired Rockerbox, a leader in marketing attribution.
Interesting. So they're going all in on AI and performance measurement. It sounds like they're trying to become more than just a media quality company.
You're picking up what they're putting down. They're aiming to be a one-stop shop for advertisers to maximize the impact of every ad dollar they spend.
I like the sound of that efficiency and accountability that's music to any advertiser's ears.
Indeed. And these acquisitions aren't just about expanding their offerings, they're also opening up a whole new market for DoubleVerify.
Now that's intriguing. Tell me more about that.
These new capabilities allow DoubleVerify to target mid-size advertisers and tap into budgets that are more performance-driven. It's a whole new pool of potential clients they haven't really focused on before.
So it's like a growth hack. Then new solutions, new markets, new revenue streams. Pretty savvy.
Very much so. They're turning these challenges into opportunities, which is always impressive to see. They're clearly a company that's focused on adapting and evolving.
It sounds like they're going through a major transformation, but
Right.
how exactly are they using AI in all of this?
Well, their universal content intelligence AI is helping them analyze video and images on social media. This is key for expanding their social media measurement business.
So AI is helping them break into those walled gardens we were talking about. Makes sense.
Exactly. And remember, DV Sybase, they're using AI to optimize bidding strategies for more efficient media buying. It's all about squeezing more value out of every dollar spent.
And I'm guessing this AI magic doesn't stop there.
Not at all. What's really fascinating is that they're even using AI internally to write code and boost overall company efficiency. Talk about putting your money where your mouth is.
AI, automating AI, very meta. So we've covered the challenges, the strategic responses, and the AI angle. What's the big picture here? What's DoubleVerify's ultimate vision?
DoubleVerify wants to unify media quality optimization and performance measurement into a single powerful platform. They're not just about protecting ad spend anymore. They're about measuring and optimizing performance across the board.
So it's like they're going from ad bodyguard to ad strategist.
That's a great way to put it. And in a world where efficiency and accountability are paramount, this vision makes a lot of sense.
It does. But let's be realistic. How long is this transformation going to take?
Well, DoubleVerify sees 2025 as a year of transition. They've factored some headwinds into their guidance, including the loss of that major customer, and limited growth from those 6 large clients who scaled back spending.
So it's not going to be an easy ride.
Not exactly, but there are also significant opportunities on the horizon: social media activation, upselling new clients to premium solutions, and fully integrating Rockerbox.
It's a balancing act then, managing the short-term challenges while building for the long term.
Exactly, and they're laying the groundwork for potentially accelerated growth in 2026 and beyond. Welcome back to Talk Tickers. Before we jumped into that wild trade idea, we were discussing DoubleVerify's ambitious goal of creating a unified platform.
That's right. A platform that brings together media quality optimization and performance measurement all in one place. It's a bold move for sure. But do you think they can actually pull it off?
That's the million-dollar question, isn't it? Their success hinges on a few key factors.
Yeah.
One crucial element is how seamlessly they can integrate all these different pieces, especially with those recent acquisitions.
Right. Acquiring those companies is one thing, but making them all work together smoothly is a whole other challenge.
Exactly. We're talking about different technologies, different company cultures, different ways of doing things. It takes a lot of time and effort to mesh everything together effectively.
Definitely. It's like trying to solve a complex puzzle where the pieces keep changing shape.
A very fitting analogy, and it's not just about technical integration, there's also the human element to consider.
What do you mean by that?
Well, they need to get those newly acquired teams fully on board with DoubleVerify's vision. Everyone needs to be rowing in the same direction.
The classic culture clash that can be tricky, especially when you're bringing in companies with their own established ways of working.
Precisely. And it's not just about merging teams, it's also about making sure these new solutions actually resonate with DoubleVerify's existing client base.
Right. Well, those big brand advertisers buy into this expanded suite of offerings. That's the real test.
Exactly. DoubleVerify needs to convince them that this unified platform can deliver even more value and solve their biggest pain points.
It's a high-stakes game, no doubt. But if they can nail the integration and get everyone on board, this could be a huge win for them.
Absolutely. They would become a true force to be reckoned with in the digital advertising world.
Okay, so let's imagine they managed to pull it off. They've got this seamless, unified platform. Everyone's happy, clients are lining up. What does that mean for the future of digital advertising as a whole?
Now we're entering the realm of speculation, but it's an interesting thought experiment. If DoubleVerify succeeds, it could create a ripple effect throughout the entire industry.
You mean like setting a new standard for how things are done?
Exactly. Their vision of combining media quality optimization and performance measurement could become the new norm. Other companies would likely follow suit, leading to a more transparent, accountable, and efficient ecosystem overall.
And potentially a more level playing field for advertisers of all sizes.
Exactly. With a unified platform like DoubleVerify's, even smaller advertisers could gain access to sophisticated tools and insights that were previously only available to the big players.
Now that would be a real game changer. Imagine a world where every ad dollar, regardless of who is spending it, has the potential to reach its full impact.
It's a compelling vision and one that DoubleVerify is clearly passionate about. Whether they can truly make it a reality, well, that remains to be seen. But one thing's for sure, this is a company worth watching closely.
Couldn't agree more. They're pushing the boundaries and challenging the status quo. Regardless of the outcome, they're shaping the future of digital advertising.
And that's what makes this deep dive so exciting. We're witnessing the evolution of an entire industry, and DoubleVerify is right there at the forefront.
Okay, so we've talked about DoubleVerify's big picture vision and the potential impact on the industry. But let's shift gears and focus on their 2025 roadmap. What are the key milestones we should be looking for?
That's a great question, first and foremost. It all comes down to execution. They need to prove they can deliver on those ambitious plans we've discussed.
Right. Actions speak louder than words. So what should we be keeping an eye on specifically?
Well, their progress in those social media walled gardens is going to be critical. Can they gain traction with those new pre-bid solutions and capture a decent share of that social ad spend? That's a tough nut to crack.
Definitely a big one to watch. It's a crowded and competitive landscape, so they'll need to find a way to differentiate themselves.
Absolutely. And don't forget about those sell-side solutions for SSPs. How quickly can they scale those offerings and integrate them into those private marketplaces and programmatic direct deals?
Right. It's all about reach and adoption. The more publishers they can partner with, the greater their potential impact.
Exactly. And then there are those acquisitions to keep an eye on. How smoothly can they integrate DV Sybase and Rockerbox? Can they leverage those new capabilities to attract new clients and expand their offerings?
That's the key question, isn't it? Successful integration is essential to unlock the full potential of those acquisitions.
For sure. And let's not forget about their internal use of AI. Are they able to harness the power of AI to enhance their efficiency and make smarter decisions across the company?
That's a crucial piece of their strategy. If they can truly leverage AI effectively, it could give them a major competitive advantage.
Absolutely. So there you have it, a roadmap for 2025 filled with challenges, opportunities, and a whole lot of potential.
It's definitely a dynamic situation, and we'll be watching closely to see how it all unfolds. Now, let's talk about the financial side of DoubleVerify's transformation. Are they sacrificing profitability to chase growth? What do their numbers tell us about their prospects for long-term success?
That's where we'll pick up in part 3. We'll break down their financials and see if their numbers support this ambitious vision. Stay tuned.
Welcome back to Talk Tickers. We've spent the last 2 segments exploring DoubleVerify's strategic moves, their vision for a unified platform, and the potential impact on the industry as a whole.
We've covered a lot of ground, but as we all know, no deep dive into a company's performance is complete without examining the financial side of things.
That's right. So let's get into the nitty-gritty of DV's numbers and what they tell us about their prospects for long-term growth.
So their 2025 guidance predicts roughly 10% revenue growth, which, considering those headwinds we discussed, feels somewhat conservative.
Yeah, that makes sense. They seem to be acknowledging the challenges up front and setting realistic expectations.
You're right. Remember that major customer who slashed their budget and those 6 large clients who reduced spending, all of that is baked into their projections?
So they're not trying to sugarcoat anything, but even with those challenges, they're still projecting double-digit growth.
Which isn't too shabby, especially given the current economic uncertainty. It seems like they have confidence in their ability to execute on their strategy and capture those growth opportunities we've been discussing.
Okay, revenue growth is one piece of the puzzle.
Yeah.
What about profitability? Are they having to sacrifice margins to chase this growth?
Not necessarily. They're projecting adjusted EBITDA margins of 32% for 2025, which is down slightly from 2024, but still quite healthy.
So it seems like they're striking a balance between growth and profitability. It's not a reckless race to the bottom.
Exactly. Their approach seems disciplined and strategic. It's also worth looking at cash flow, which, as you know, is a critical indicator of financial health.
Absolutely. How are they doing on that front?
Well, they generated a strong $160 million in net cash from operating activities in 2024, which demonstrates their ability to convert profits into actual cash.
That's a great sign. It gives them flexibility to invest in those growth initiatives, pursue further acquisitions, or even return capital to shareholders.
Exactly. It strengthens their overall financial position and opens up options for them.
So the financials seem to paint a picture of a company that's navigating some tricky waters, but remains well-positioned for growth. But what about the longer term? Can they sustain this momentum beyond 2025?
Now we're gazing into the crystal ball a bit, but there are reasons to be optimistic if they can successfully execute on their unified platform vision and capitalize on those emerging opportunities in social media and performance marketing. Their potential is pretty significant.
I like the sound of that, but ultimately it all comes down to execution, right?
Absolutely. Their success hinges on their ability to adapt and innovate and stay ahead of the curve in this ever-evolving industry.
It's a high-stakes game, for sure,
Yeah.
but they've shown they're willing to take risks and make bold moves.
And that's what makes them such a fascinating company to follow. They're not afraid to disrupt the status quo and push boundaries. I think it's safe to say that DoubleVerify will continue to be a major player in the digital advertising space for years to come.
There you have it, folks. We've explored the challenges, the opportunities, the financials, and the vision. What do you think? Is DoubleVerify a company you would consider investing in? Let us know in the comments below. And that wraps up our deep dive into DoubleVerify's Q4 2024 earnings call. Thanks for tuning in to Talk Tickers, and we'll catch you on the next one.